All right, good morning, traders. Happy Monday. Hope you had a good weekend, and we'll dive in here. I got probably got a good 20, 25 minutes. Then I got to jump into the options room for a nice 90-minute session. And then if any of you are doing JC's Squeeze Pro class, I'll be doing the live trading later today. But good to see everybody. Hope you had a good weekend. Let's dive in. So, interesting week last week. We get the flush. But then you got one heck of a bounce here into the end of the week. So the first place I'm going to have you look here would be a weekly chart. And I just think in terms of the structure of this uptrend here in general for both the S&P 500 and the QQQ, it holds up perfectly last week. That dip to the 21 holds as support. They come in, they buy it up. Still got stacked DMAs. So everything's intact here. But when we look at a daily chart, it's a little bit sloppy. So I think that's on a daily chart. There we go. It's a little bit sloppy at best. We're struggling to really get back above that 21. No stacked DMAs. There's messy momentum here. So the weekly chart leads me to believe, big picture thinking, the trend is very much still intact here. And into October, into November, into December, holding the weekly trend just leads me to believe the trend can continue. In the short term, though, I do think you want to be a little bit patient. It could be a bit of a chop fest here. So I think a lot of folks are, it's one of the two extremes. A lot of folks are looking for that immediate move back towards the highs, which could potentially happen. But then there's the bears out there looking for a nasty, nasty flush. The third alternative is the market just kind of chops itself silly all the way into October. So I think, buying the out the money calls, the really short-term trades, that works really well with the wind at your back. It's not the kind of daily structure we had back here in August. So I do think big picture, the trend looks good here. Shorter term could be a little bit sloppy. So, if the market can at least kind of stabilize here, and by stabilize, I mean essentially just kind of, while we're not ripping back towards the highs, we're also not fleshing down towards those lows, just more so a little bit of choppy range-bound action. I think at the very least, if the market can do that, then, a lot of the names that held their structure perfectly throughout that selling pressure, names like a Tesla. Now, keep in mind, everything benefits from a strong market behind it. But in the midst of all that volatility last week, I'm really paying attention here to things like a Tesla, where the structure just holds up perfectly. Paying close attention to things like Netflix, things like a ZS, names like a Home Depot. They hold up perfectly last week, where a daily chart, say, of a Facebook, that really took a whooping there. A daily chart of an Apple, that got pretty jacked up. So at the very least, if the market can avoid rolling back down towards those lows, I do think potentially the setups that held their structure really well over the last 2 to 3 weeks, say, I think potentially those are the names that could move higher without the market. But I would suggest being patient here. So Tesla, I think if you get a dip here, you look to get long, and I think you look to get long into pretty much October 15th expiration. I think earnings is the week after. So October 15th expiration, October 22nd, depending on what strategy you want to use. But I think a spot that you look for a dip here this week, just beautiful weekly squeeze. Take note of how long these weekly squeezes can take to even just potentially start to look bullish. We go into a weekly squeeze towards the tail end of March, and it wasn't up until basically September that your histogram goes positive. So we're building energy. Now your weekly squeeze is officially firing long. You've also had this 3-day squeeze here, so that could pack a punch. And here's your daily squeeze. And I think the major thing last week was, again, as the market's getting tossed around a bit, it's picture perfect 4-hour squeeze here. Holds up really well. So I can suggest you get long at this point. As we're pushing through plus 2 ATR, it might have another 10, 15 bucks in it before it pulls back again. But I do think if you get a dip here, you're looking to get long, again, October 15th, October 22nd, you're looking to build a position with the idea that from a weekly chart all the way down to a 4-hour chart here, you're building up energy with bullish structure. By bullish structure, I mean you have positive histograms everywhere. You have stacked DMAs. So the idea is, if this 4-hour squeeze can ultimately fire long, that might potentially trigger the daily squeeze to fire long. If the daily squeeze can fire long, it could potentially continue to fire that 3-day, which works its way up to the weekly. So you're building up energy all over the place here. I think if you get a dip, you look to try to catch that next leg higher. I'll show you all what we got here. So in the mastery, we have 745, 740 put credit spread. And then I got a few more here that I took on my own. Starting to bring in some premium. So I think you have Tesla on your watch list. I think you have the old Tesla on the watch list here. And another name I think is Netflix. Now, would definitely be at least my benefit, I think to a lot of our benefits, to get a bit of a dip here. If you can get a dip, even to say the 8 EMA, down near 587, if you want to look a bit under the surface here, maybe a little cute little dip to the 4-hour 21. But I think you got a really good structure to work with here for Netflix. To me, it all begins here on your weekly chart. So with your weekly chart, let's pull that bad boy up here. A lot of the same reasons I'm interested in a Tesla right now. A lot of the same reasons. You go into a weekly squeeze here back in August. So well over a year ago, Netflix goes into a weekly squeeze. And what we've seen over the last couple of weeks here, mind you, during the midst of a little bit of selling pressure here from the mama market, weekly squeeze finally fires long, but importantly, even more important, I think, actually, previous resistance around 570, 575, it's holding up as support here. Where if Netflix were to fall back in this range, I think it's kind of just a dud. But the fact that it held there, and now you have a brand new daily squeeze, you have stacked DMAs, green 10x bars, and you got this bad boy right here. Really bullish 4-hour. So with a bit of a dip here, a dip offers a better entry price-wise. It also offers a little bit more premium if you're looking to sell a put credit spread, which that's what I'm looking to do here. So on a dip, I think October expiration, you're looking to sell a put credit spread, buy some calls, really looking for that weekly squeeze to have another 2 to 3 weeks of gas left in the tank as we approach earnings right around end of October, October 19th. So 2 spots to look for a dip there. Netflix, Tesla. Another spot to look for a dip would be a Home Depot. Notice the theme here. They're all daily squeezes, but they held up beautifully while the market's kind of throwing a fit last week. So daily squeeze here for Home Depot. You've also got a 4-hour. You've also got a 3-day. And you have a weekly. So you basically got bullish squeezes from top to bottom. And I think if you get a dip here this week, you can play this with plenty of time till expiration. In terms of earnings here, earnings aren't until November 16th. So if you get a dip, you can really go out, end of October, early November, give that swing trade plenty of time, looking ultimately for that 4-hour squeeze to trigger that daily squeeze to trigger the 3-day, ultimately trying to trigger that big old weekly. So there's another spot for you. Something that we picked up here in both rooms last week, and just another one that behaves perfectly there is ZS, Zscaler. Just a really good quality uptrend. Daily squeeze at the 21. Got all that bullish momentum with the green 10x bars. And another part of the kind of common theme right now is you got a 4-hour squeeze, which you got here for ZS. So pretty much just looking for a move into about, 288-ish. In the options room, we have put spreads that expire this week. And then in the mastery, we got a few weeks left till expiration. So pretty much looking for a move here into 2 to 3 plus ATR. And we'll take a look at our credit spreads, and we're really trying to get 70, 80% of max profit. But another one here, we get a little bit of a dip in the market this morning, but your internals look good. VIX is chilling out. These are a few spots I would have you taking a peek at. And then the last spot I think I would really stress here would be Nvidia, mainly because if we go sector to sector, check out the industrials. It's a pretty jacked up daily chart. If we look at energy, pretty jacked up trend. I would say even technology here, from a momentum perspective, especially XLK, got red 10x bars everywhere, no stacked DMAs. What does look really good here are the semiconductors. Just in terms of structure, it's probably the best right now, just sector to sector. So if the market stabilizes, even better if the market kind of gets a flame up under it, I think you're going to see the semiconductors be a big part of that next leg to the upside. So Nvidia, obviously the king of the hill here, and you got a daily squeeze, all good stuff. You could take a look at a Broadcom. Another good looking daily squeeze. You could take a look at an AMAT. I think you wait for a dip there. And you could take a look at an AMD. I'm going to chop in here at the buy zone, but definitely take note of the semiconductors. That's a really good structure here with a daily squeeze at the 21. Considering the market getting a little bit sketch last week, and you still have a weekly squeeze here. So there is a lot of potential if the market doesn't yank it lower. We got a good watch list here. So those are the major spots, many of which I think you need a dip. You definitely need a dip in Tesla. I can't suggest an entry at plus 2 ATR. So I think you buy the dip on Tesla. I think you buy the dip on a Netflix. Nvidia, you're not so much looking for a dip as it's just chilling here at the 21. So I think for Nvidia, you're waiting for, can we get a bullish looking squeeze somewhere? What can we get? What can we get here? You got to have something. Yeah, no squeezes anywhere. So, the nice thing about Nvidia and a lot of the semiconductors is, unlike a Microsoft, you're not worried about earnings in a few weeks. I think Nvidia doesn't have earnings until, end of November. So if you like that daily squeeze, you can build a position now. And you can really, sit through a lot of crap if you have to, giving it all the way until November. So those are the major spots. Real quick, let's rifle through the watch list here. And if you happen to like anything, I'll keep this up. You can jot it down for your viewing pleasure. But builders here looks good. You're up there at plus 1 ATR. It's not perfect as far as an entry goes. So I take a dip. I like my entry at the 21. I like it a bit too much to sacrifice. Chipotle. Great daily squeeze. Holds up really well here. Histogram goes positive. If you can get a dip, I think you take it. EW. CHCA looks pretty good. Monday. New IPO here. Pretty solid. Papa John's actually looks really bullish. So a pizza stock might not be as sexy as a Tesla, so to say, but you got a trend here. You got a really solid trend going, and you got a bullish daily squeeze. You probably have a bullish 4-hour. I mean, it looks just as good as a Netflix. So you got Papa John's there. You got Waste Management, Zoom Info. As I mentioned earlier, I think ZS looks pretty good here. You got Align, you got Broadcom, ELD, Dick's Sporting Goods, Etsy. Real quick here, you got a daily squeeze in a Google. Solid. You got a daily squeeze in a Microsoft. Solid. What you don't really have is an attractive daily chart for the QQQ just yet. So don't fool yourself into thinking that we're back here in August. basically the total opposite right now from a structure and momentum standpoint. That that trade on Facebook back in August. All right, we got a daily squeeze. Let's get long at the 21. That trade back in August on a Microsoft. You got a daily squeeze. That all works just so well. It's so efficient because you have the cues with the same exact structure behind you. There's that tailwind. We don't have that right now. Now, the cues can rip back to all-time highs by Friday, but just in terms of the structure we're currently working with, no stacked DMAs, red 10x bars, daily squeezes firing short. Your 4-hour chart isn't the most bullish thing going here. So that's why I'm being a bit patient with the Googles, the Microsofts. You don't really have a QQQ behind you. Now, you could into October, you could into November, December, etc., because your weekly trend is well on the live here. Just a dip to the weekly 21, holds firm. So your uptrend is, it's breathing here. It's kicking and breathing. It doesn't mean it has to continue immediately. So it's so easy to look at that chart of the S&P 500 and say we dip and then we explode. We dip, then we explode. Prepare yourself for that kind of price action. Where all the markets did was flush back to key weekly support here, but you're waiting 1, you're waiting 2, 3, 4, 5 weeks before you get that next leg to the upside. That's what that daily structure is looking like. A chop fest at best. So I think you got to be really picky here about the things that you get long. Again, going back to structure here, XLK is nowhere near as good looking as the semiconductors. If there's a daily squeeze in Nvidia and there's a daily squeeze in a Microsoft, which one am I going to lean into a bit more? The daily squeeze in Nvidia, because of the structure here of SMH. So those are a few spots here, my friends. SC looks good. Tesla's on crack. Ulta, solid. And Generac is another really good uptrend here. Steady institutional accumulation. All right, I got about 10 minutes though, so let me get caught up in the chat. I'll keep the watch list up here. We'll get the futures up. Step number 1 here for this daily chart to start getting a little bit more appealing is just kind of steady, no BS price action back above the 21. That, getting back to the 21 and holding here, you start to get rid of bearish momentum, right? A lot of things start to clean up a little bit. But if all we're getting here is daily squeeze fire short, so you flush to -2, -3, you revert back to the 21, next leg to the downside, that's going to wipe everything out. So patience. Lucas, that's a good question. So, when it comes to trading the squeeze, not all squeezes are created equal, so to say. So I got like a whole list of criteria that the stock has to have for me to want to trade that daily squeeze. A few pointers here is you want to take entries at or near the 21 EMA. And one of the most important concepts we can learn as a trader is the concept of average true range. Average true range is just the average move a stock is making up or down over the last, call it, 14 days. So, everything I have on my chart here just ties back to that concept of average true range. So the white moving average here is the 21 period exponential moving average. Now I got 2 yellow sets of Keltner channels here. Right? I got the purple, I got the red. And what those are measuring are average true range moves above or below the 21 EMA. Yellow is 1 average true range move, above or below. Purple is 2, red is 3. More often than not, with a good daily squeeze, what you're going to get is phase 1 of the squeeze is where we're building up energy near the 21 EMA. Phase 2 of the squeeze, in terms of probabilities, you tend to get a move into about 2 to 3 ATR. So in terms of, your risk reward, that's the reward you're looking for. You're looking to catch as much as you possibly can of that move from the 21 into about 2 to 3 ATR. Now, if that's your reward, that should emphasize the importance of taking our entries as close to the 21 as possible. When you start chasing it, you're getting long up here. You don't have too much reward left. And it's a good looking setup, like all the way down here. So there's one little tip I would give you. But let me give you this real quick as well. But that's important. Taking entries at or near the 21 EMA, it's going to allow you to get, as big of a chunk of that pie as possible. But let me hook you up here with a video I did for simpler trading on the squeeze. And I think that should answer a lot of questions for you. All right, there you go. Put that in the chat for you. Don't do that 51. I don't day trade, so I couldn't so much have a suggestion there. I mean, here's what I tell you could happen over the next handful of days. I think you look for a ZS here. Yeah, you got squeezes everywhere. So, this week I'm looking for a ZS to move into, 285, 288. So that's based off that daily chart. But if you find a 30-minute squeeze here, there could be a shorter term trade in that. All right, we're doing good on time here. We're doing good on time. Lucas, I got you. I got you. All right, let me just scale up here, try to get to the top of the chat. Morning, Andrew, Terry, Warwick. Morning, Frank. Yes, AJ, to your point, XL, you know what? XLY looks just as good, if not better, than SMH here. So there's another spot. I'm glad you called that one out. Let's do this. Let's go to etfdatabase.com. Let's search XLY. And let's go on ahead and see what's under the hood here of this pretty looking basket. Okay, it all makes sense. Yeah, it all makes complete sense. Amazon, Tesla, Home Depot, McDonald's, Lowe's. I mean, just to look at a few of those there in terms of, why does XLI look so solid? Well, Tesla, Amazon, Home Depot, and Lowe's. There's another good structure. There's another really good looking sector. Java, I wouldn't say, standard deviation works better than, ATR or vice versa. I think you just want to settle on one and stick to it. It's not that one is better than the other. I think the key is just, can you create rules for yourself around one of them and then stick to them? Because you might use Bollinger Bands. I might use, the Keltner channels here. We might both have rules, but if we can't stick to them, neither you or I are going to get the most out of it. So I'd say you pick whichever one you really have a preference towards, but then you got to have those rules. That's why this is all helpful for me. I get long here, trying to take profits right up here. And you could easily use Bollinger Bands as well. Nick, once the stock starts to break under -1, -2 ATR, that's typically where I would look to take a stop. I mean, don't go and start doing this. Quite frankly, in this market, some of these trends are so strong. It's I mean, as I say this, the market probably tops out now, but some of these trends are so strong. As I look at my trades this year, in some things I would have been better served just not having a stop. If I'm getting long at the 21 EMA, yeah, there might be 4 to 5 days of some really uncomfortable, leakage to the downside, but so these trends are just so strong. Give your swing trades time. That's just me talking out loud, though. Once we start breaking under -1, -2 ATR, that's when I start to think about jumping ship. Do I have any videos on how to set up my Thinkorswim? I would say search the channel. There should be a few things. I can't remember off the top of my head. I would say search the channel, and if you don't happen to find anything, then let me know on Wednesday if you can join for Wednesday's session, and then I'll put that on the list of videos to make for you. And then in terms of, good question, Java, buying stocks at a 52-week high, to me that's bullish, right? Stocks at a 52-week high, it's in a strong trend, it's likely bullish, but I still want to pick my spots wisely. That's not up here at 2 to 3 ATR, so I can only kind of get long back down here. So I will trade stocks near their 52-week high, but still picking my spots wisely. So if we're at a 52-week high or we're within 5% of it, whatever the case may be, always taking entries as close to the 21 EMA as possible. And a lot of the best squeezes do tend to be in stocks, just shy of their 52-week high. Very much like a ZS here. Now, there's the all-time high, but obviously there's your 52-week high. I like squeezes underneath that. Ryan, that's a great question. So Ryan, I go as far out the money as possible. This is just like more often than not. More often than not, I'll go as far out the money as possible with the short strike, so long as I can get about a 2-to-1 risk-reward ratio. So typically that's what I'm looking for. Now, there's definitely instances where I'll go a bit closer to the money. There's also times where I'll go a bit further out, but usually for me, that's the process. I give it however many days I want to give it till expiration, and then I'm going to start playing around with the chain. Can I get, can I sell the 260 put and get a 2-to-1 risk-reward ratio? No? All right, then I'll start working up a little bit more. And if you manage, so here's what I do. When I structure the trade, when I take my entry, I'm risking just to, use an easy number. This is just, best case scenario, worst case scenario. Worst case scenario, max loss, I'm risking $200. Let's say, max profit, 2-to-1 risk reward ratio, $100. So there's best case, worst case scenario. Now my goal is to try to keep that loss on that trade, if it comes against me, equal to or less than the $100 max profit. If I can put on a put credit spread with this exact risk reward here, and say I cut that trade off for a $60 loss, now on that next trade, if it hits, I can slightly move that ball forward. Where if I lose the full 200 here, now I got to win 2 trades in a row, just get back to break even. So the risk reward that we get when we pull the trigger is obviously a big component of it, but another big component of it is, how are you going to manage that risk? You could get away with doing 4-to-1 risk reward ratios. Obviously, your stop is going to be a little bit tighter. So hopefully that makes sense. But listen, y'all, I got to be in the options room here in a few minutes. So I'm going to let y'all go now. Be patient here. Again, the fact that we held the weekly structure so well leads me to believe, the beast is alive here. It just doesn't mean we have to get that immediate, rip right back towards the highs. Where I think we're more likely to get that is when you're looking at a prettier daily chart. Positive histograms, steady price action above the 21, green 10x bars. We're not quite there yet. So I think a little bit patient in the short term, but continue to focus on those setups that are unfazed here. Netflix was unfazed. Nvidia was unfazed. Tesla was unfazed. The Home Depots, the Dick's Sporting Goods, the Pizzas, they all hold up really good. If any of you are on Thinkorswim, I'll share this watch list here in the chat. And if you're on another platform, hopefully you've had enough time here to jot down anything you like. I'll put that in the chat there for y'all, for those interested. But good stuff. So be patient today. I'll keep y'all posted, and I will see you for another round of pre-market prep Wednesday morning. Be good till then, y'all. Talk to you soon.